Ever wonder what's really driving those big company earnings headlines? It's often way more than just the numbers.
Yeah, it's strategy, it's market shifts, it's, seeing the future path.
Exactly. And today, we're taking a deep dive into Loar Holdings Inc. They just dropped their Q2 results and revised their whole 2025 outlook. We've got the reports, the earnings call transcript, the investor slides, the works.
Right. And our mission here is really to pull out the most important bits, the nuggets of insight, so you understand not just what happened, but critically, why it matters, and what Loar's signaling for the road ahead.
Okay, let's get into it. Loar Holdings, Q2 2025. Headlines are saying record-breaking. What's the real story here? What jumped out?
Well, it's the scale, really, the sheer scale of improvement pretty much everywhere you look. I mean, take net income. It didn't just tick up, it soared nearly 119% year over year.
Wow, 119%.
Yeah, from about $7.6 million up to $16.7 million. That's not small change.
Yeah.
And if you need one number that sort of captures how well they're running things, Adjusted EBITDA, $47.1 million. Okay. That's up almost 35% year over year. And importantly, it pushed their margins to a record 38.3%.
38% margin in aerospace and defense components. That's really high, isn't it?
It's exceptionally strong. It tells you they're getting, maximum value from every single sale. Really impressive operational control.
Okay, so eye-popping figures.
Yeah.
But like you said, it's about the why. What factors actually fueled this? It wasn't just luck, presumably.
No, definitely not luck. It was broad-based strength. Record sales across all their main end markets. Commercial OEM, that was up 18%.
Yep.
Commercial aftermarket, even better, up 29%. And defense, a massive 51% jump compared to Q2 last year.
51% in defense. Wow.
Yeah, so it wasn't just one segment carrying the load. It suggests, a really well-executed, diversified strategy. Plus, they talk about these strategic value drivers.
Okay, I saw that turn. What does that actually mean in practice?
Think of it as lots of small things adding up. Launching new products, optimizing how they make things, getting their teams ready, and crucially, getting price increases above inflation. Continuous improvement, basically.
Got it.
And then you add in a better sales mix, like more high-margin stuff, plus lower interest costs and higher operating income. It just supercharged that net income figure.
So even without buying other companies, they were growing.
Exactly. Their organic net sales, just the core business, still grew an impressive 11.3%. That shows real underlying strength. It's not just growth by acquisition.
Okay, so this wasn't just riding a wave. They're making their own waves, it sounds like. What does this performance tell us about Loar's specific place, their niche in the aerospace and defense world?
Well, it really highlights how well their core strategy is working. And that strategy is all about focusing on niche, often proprietary components.
Proprietary meaning. Other people can't easily make the same thing.
Precisely. They're not building the whole jet engine, maybe, but they're making critical parts inside it that are maybe custom designed, maybe patented, often sole source.
Sole source, meaning they're the only ones who supply it.
Often, yes, or one of a very small number. That gives them significant pricing power and makes them less vulnerable to, say, cost-cutting drives. Airlines need these parts.
Right.
So their disciplined operations plus these smart additions they make lets them really capitalize on demand. And that double-digit organic growth, it proves the fundamental model is rock solid.
Okay, now here's where it gets really interesting, especially if you follow M&A. Amidst all these great numbers, Loar also announced another acquisition. Their 18th since 2012, apparently. Beadlight Ltd. Tell us about them.
Yeah, Beadlight. They closed that deal July 28th. It's a UK company. They do aircraft cabin illumination, some air filtration, human-machine interface stuff. Pretty innovative, actually. They pioneered the first LED reading light for commercial jets.
Huh, okay. So why Beadlight? How does it fit?
Loar calls it a great fit because, one, it's niche. Two, about half its revenue is already aftermarket, which Loar lives for the margins. And three, they have proprietary products.
Makes sense. But I heard something interesting about the price.
Ah, yes. The CEO, Dirkson Charles, he was quite direct on the earnings call. He said, quote, "We bought it cheap."
Cheap, that's bold, because didn't analysts think the price looked, well, kind of high?
Exactly. Some analysts noted the valuation seemed a little steep, mid-single-digit revenue, barely breaking even on EBITDA this year. So, yeah, cheap versus steep.
So how do we square that circle? Is the CEO just being bullish, or is there something else going on?
It really comes down to Loar's whole philosophy on acquisitions. They're playing the long game. They explicitly say they look at future potential, not just today's numbers. The CEO said they don't look in the revenue mirror, but what we can do with it.
Okay, so they see something others don't.
They believe so. They expect Beadlight to be significantly accretive, meaning adding a lot to earnings in 2026 and beyond. They see a rich pipeline of opportunities there.
Like what?
Well, huge potential for what they call top-line synergies. Think about it. Loar's Schroth seatbelt business sells to many of the same airlines and aircraft manufacturers that Beadlight does.
Oh, so they can cross-sell immediately. Introduce Beadlight's products to their existing customers.
Exactly. Instant leverage that doesn't show up in Beadlight's current financials. Plus, this wasn't an auction. It was a proprietary process. Loar went directly to them.
Meaning they likely got a better price than in a bidding war.
That's the implication. It shows their disciplined approach. They find these strategic fits that maybe don't look amazing on paper today, but where Loar feels they can unlock a lot of value. It's patient, strategic M&A.
Interesting. And beyond Beadlight, they also tweaked their finances, right?
Yeah.
Lowered interest rates on their debt.
Yeah, another smart move, just good financial housekeeping. They got a 50 basis point reduction on their main credit line down to SOFR plus 4.25%, provided their leverage stays below a certain level.
And that actually saves them money.
Absolutely. They estimate it cuts their full-year interest expense by about $2 million for 2025. That's $2 million straight to the bottom line, boosting net income. It just reinforces that disciplined financial management.
You mentioned earlier they're like a cash compounder. Can you unpack that a bit? What makes a company a cash compounder and why is Loar considered one?
Sure. So a cash compounder isn't just profitable on paper, in accounting terms. It's a company that consistently turns a really high percentage of those profits into actual spendable cash flow.
Okay, so they're good at collecting the money they're owed and managing working capital.
Exactly. They generate lots of cash relative to their earnings, and then critically, they reinvest that cash smartly back into the business. Maybe R&D, maybe new products, maybe disciplined acquisitions like Beadlight to generate even more earnings and cash in the future.
It's like a snowball effect.
Precisely, a virtuous cycle. Loar's high margins, their focus on proprietary aftermarket parts, and their strong cash conversion really fit that mold. They turn profits into financial power again and again.
That makes sense. Okay, so great Q2, strategic moves. Let's look forward.
Yeah.
They raised their full year 2025 guidance. What are the new numbers and what's giving them this confidence?
Yeah, they definitely bumped things up. New net sales guidance is $486 million to $494 million. That's up a few million from before.
Okay.
Adjusted EBITDA, now $184 million to $187 million. Again, a nice lift. But the big one for investors is probably adjusted EPS.
What's the new target there?
Now, between $0.83 and $0.88 per share. That's a hefty 16% jump from their previous guidance range. That signals real confidence.
16% is significant.
It is, and they expect to keep that adjusted EBITDA margin strong, around 38%. They also lowered their expected interest expense, like we talked about, and their effective tax rate slightly. And the CEO, Dirkson Charles, he even brought up this thing called the Heather Rule.
The Heather Rule, what on earth is that? Sounds like an inside joke.
Maybe a bit, but it's telling. Apparently, during their IPO roadshow, an investor named Heather really grilled them on whether they'd actually hit their targets.
Right.
And Dirkson basically promised her and the market that Loar commits to delivering or exceeding guidance. So bringing up the Heather Rule now is like saying, look, we take this revised higher guidance very seriously. We plan to hit it or beat it.
So it's a way of underlining their conviction. A public promise almost?
Exactly. It underscores their confidence rooted in how they see the market and their own operational strength.
So what are those market assumptions? Where do they see things going for the rest of 2025?
They break it down pretty clearly. For the OEM side, making parts for new planes, business jets, general aviation, they're sticking with high single-digit growth.
Holding steady there, why not raise it?
They mentioned some ongoing choppiness. Supply chain hiccups still happening, and OEMs managing their inventory carefully, so solid growth, but maybe a bit bumpy.
Okay. What about the aftermarket?
That's where they see continued strong demand. They're projecting low double-digit growth for commercial, bizjet, and general aviation aftermarket. And crucially, they said they see no degradation in that demand. It's very stable.
And defense. You mentioned that was strong in Q2?
Still looks very strong. They're guiding for high double-digit growth in defense for the full year, specifically in the 17-20% range. So continued momentum there.
Right. So how does all this tie back to their strategy, these numbers, these assumptions? How do they connect to those value drivers and their plan for creating value?
It shows those drivers are working. They firmly believe they can keep launching new products, keep finding efficiencies, developing their people, and getting price increases. That's the engine behind the numbers.
Do you have specific targets for that?
Yes, quite specific. They talked about a new product pipeline worth over $500 million in potential sales over the next 5 years. Just those new products are expected to add 1-3% to revenue growth each year.
Wow, that's like built-in organic growth.
Exactly. It's not just hoping the market lifts them. And tying back to that cash compounder idea, they expect cash flow conversion, turning earnings into cash, to be over 125% for 2025.
Greater than 100%. How does that work?
It can happen due to things like managing working capital very effectively, depreciation charges, which reduce reported income but don't use cash, and other non-cash items. Essentially, they expect to generate even more cash than their net income figure suggests. Extremely efficient.
That operational focus sounds key. But look, even with this strong outlook, things are never perfect. What headwinds or challenges did they mention? What complexities are they dealing with?
Yeah, they were realistic about challenges too. For one, regulatory hurdles. They're still waiting on approvals, particularly from France, for another pending acquisition, LMB Fans and Motors.
Yeah.
So M&A isn't always smooth sailing.
Right, external factors.
And there's that choppiness we talked about in the commercial OEM sector. Supply chains aren't perfect. Airlines are watching inventory. That's a specific area they're managing carefully. And of course, just broader macroeconomic stuff, keeping an eye on inflation, interest rates, global demand, like any company.
You keep highlighting the difference between OEM and aftermarket. Given that OEM choppiness, how much does Loar's big footprint in the aftermarket help protect them? Does it make them more resilient?
Oh, absolutely. It's a huge part of the resilience, part of that cash compounder DNA we discussed. When things get choppy for building new planes, the planes already flying still need maintenance. They still need parts.
And Loar's parts are often essential.
Exactly. Because so many of their aftermarket parts are proprietary, maybe even sole source, airlines have to buy them from Loar to keep their fleets operational. They can't just easily switch to a cheaper alternative if one doesn't exist.
So they're less exposed to airlines trying to cut maintenance costs drastically.
Much less exposed on those specific parts. It provides a really valuable layer of stability and predictability, especially compared to companies more heavily weighted towards new aircraft production. It's a key strength.
It really sounds like a well-thought-out, resilient strategy. Okay, as we wrap up this deep dive on Loar, what's a final thought for our listeners to chew on? Something provocative, maybe.
Well, Loar's Q2 and their updated outlook clearly show a company firing on most cylinders, executing its strategy really well. But here's something to think about. They're betting heavily that acquisitions like Beadlight will add significant value down the road.
Right, the future accretion.
Yeah, so the provocative question is, how much of that future success really depends on Loar's unique ability to truly integrate these companies, apply their value drivers to totally new situations, new products, new teams, versus just benefiting from pipelines that were already kind of there? Is the magic truly in the integration and value creation post-deal?
That's a great point. Is there a secret sauce, the finding, the buying, or the fixing and growing afterwards? Something to watch.
Exactly. It gets to the heart of what makes M&A truly successful long-term in these specialized industries.
Definitely food for thought as Loar keeps executing its plan.
Well, we've dug through the reports and call transcripts to pull out the key insights on Loar Holdings for you. Hopefully, this gives you a great shortcut to understanding their story.
Yeah, lots to unpack there. Absolutely. Until next time, keep digging for those insights.